4 ways to save more on your mortgage in any economy. I wanted to make this video to help out the mortgage holders of New Zealand, the people that have owned houses and have got mortgages already, because I know that it's slightly more uncertain times at the moment, and I wanted to give you some guidance and some reassurance and some help around what you can do with your mortgage to take control of it during these slightly more uncertain times that will help you feel a lot more in control of your situation, and I really want to encourage this to lower anxiety levels so that you can feel like you're moving forward regardless of what the world economy is doing, because a lot of that is out of our control. But there's a lot of things that we can do that are in our control. So why don't we focus on those things, because the parts that are in our control can have a massive impact. And this is something that we can still feel really good about and make a real difference to our anxiety levels and make a lot of difference to how we're feeling around the world, about the world, okay? So firstly, I want to talk a little bit about equity in your property, all right? Just so that you understand this. This is pretty straightforward for most people, but what equity is it's the value of your house less the mortgage of your house, and the bit that's in between is your equity, right? So if you've got a $500,000 house and a $400,000 mortgage, then you've got $100,000 of equity, all right? Now, there's parts within the equity calculation that you can control, and there's parts that you can't control. So can you control the value of your house? Not really. You can't really control the value of your house. This will go up and down with the market and with the economy, and that's something that's out of your control. So let's not focus too much on the value of your house, because that's out of your hands. But the part that you can control is the size of your debt. Okay, so knowing how to handle, structure and pay your mortgage can make a massive difference. And for a lot of the people that I coach and teach, and that our team of future bound coaches and teachers, their mortgage comes down so fast that they don't have to be quite as worried about the interest rates or what's going on in the world, because you can do all this other action which makes a massive impact. All right, and so this is true control, this is real control, and this is taking action so that you can do something, because there's nothing worse than doing nothing. I would encourage people, please don't do nothing, do something, because this is going to make you feel a lot better and a lot happier. Okay, this is also not about just increasing your repayments. I wouldn't call, and I don't call, increasing your repayments a mortgage plan. That is not a mortgage plan. In fact, it can be dangerous for some people, because if you increase your repayments too much, you might find that there's not enough surplus funds left over for living or for saving, for example, and paying too much on your mortgage is a strategy that you have to be very, very careful with, and something that I am very careful about advising my clients to do. Okay, so first point number one is splitting your loans. Okay, so this is called hedging your loans or splitting your loans, and so let's pretend that you've got a $300,000 mortgage, a pretty nice small mortgage by New Zealand standards. But let's say you've got a $300,000 mortgage. Now you could put that whole $300,000 on the cheapest rate, and at the moment the cheapest rate is the 1 year fixed. That's in the low 3%, and you might think, great, low 3%, let's put the whole $300,000 on the 1 year fixed and take advantage of that low rate. Okay, this is a little bit dangerous. Okay, just be aware that what happens if that what happens if that rate goes up in a year's time, and you've got 100% of your mortgage on 1 year fixed. What that means is that in a year's time, 100% of your loan is going to get affected by that higher interest rate, and bang, your repayments could jump up. Okay, so this is why I encourage people to split their loans. So an example of this could be putting 100,000 on 1 year fixed, another 100,000 on 2 year fixed, and another 100,000 on 3 year fixed. This way, if the rate does jump up in a year's time, at refixed time, it's only going to affect a third of your mortgage. It's not going to affect the whole lot. You could do that also with, say, a 2 year split, which could be 150 on 1 year fix and 150 on 2 year fix. Okay. Now, there is ways of working out what's best for your situation and what would suit your profile best. So this is something that I encourage people to take advice on, so that you can figure out what's the best structure for your situation. Number two, offsetting some of your mortgage. So pretty much all the banks in New Zealand have got some sort of offset or revolving credit type feature. There's different types from different banks, but this is, if you use one of these well, then you can actually offset some of your income, or you can offset some of your savings, or maybe some of the money that you use for bills to reduce the amount of interest that you pay on your mortgage. You do need to be careful with these because these are on the floating rate, and the floating rate is quite a bit higher. So there is a formula for working out how big your offset loan should be. You don't want it too big, because if it's too big, you pay too much interest. If it's too small, it's inefficient. Okay, so this is something that I encourage you to get proper advice around, because if you've got the right size offset or revolving credit type loan, you pay very little interest on that portion of your lending, which can save you quite a bit of money. Okay. Third one, paying extra. There's two ways to pay extra on your mortgage. One is you can increase your repayments, often fortnightly repayments, which is what I referred to earlier, or you can do lump sum payments, or you can do a mixture of the two of those two things. Okay, so the plans that we write teach people which one works best for their situation, because you do need to be careful with how you pay extra on your mortgage, because you don't want to leave yourself in a difficult situation if you get this wrong. Okay, but both these two things will certainly help you create more equity in your loan. Fourthly, and I think actually most importantly, is use specialists. And that's what we are at FutureBound. We are mortgage specialists, and we take a lot of pride, and we just love teaching people how to structure and pay their mortgage so that they can create equity really, really quickly and get rid of debt really, really quickly. We basically show you how to use the bank systems and the bank's products to your advantage, so that you can pay as little interest as possible, and that you can pay off your mortgage in the fastest way possible. So this is a copy of our Fast Track Mortgage Plan Short Report, and this is what we give to our clients to show them what they are capable of achieving. And this is a comprehensive report. It's a comprehensive plan. It's specific to every individual that we work with, and saves a lot of money for our clients. This is a report for a real client of mine. I've changed the names and the addresses, but this is a real report, and it shows, this is one that I actually did quite recently. It shows their their income and their lifestyle expenses, the size of their mortgage, and the back page is the most exciting, because the back page shows that they did have 30 years to go on their mortgage, and they've now got only 10 years. Right, so this is really significant to go from a 30-year mortgage down to a 10-year mortgage. Do you think they're excited about that? I can tell you they're very excited about that. In terms of interest, well, they would have been on track to pay $365,000 worth of interest. They're now going to pay $108,000 of interest. That's a saving of $257,000, over $250,000 saved in interest. Okay, we're talking really significant numbers here. Do you think this will open doors for them? I can tell you this opens a lot of doors for clients like this, and this is the kind of results that the Fast Track Mortgage Plan can have. And I'd love for you to have your copy of a Fast Track Mortgage Plan as well, so that you can see what you're capable of achieving. All right, so in the form, you can fill out your name and your email address if you would like to have your version of a Fast Track Mortgage Plan. Now, this is for mortgage holders only, and this is also only for the motivated. Okay, if you cannot handle doing 10 or 15 minutes work to get your report to show you what you're capable of doing, because maybe you're going to save $250,000 as well, okay, you need to be able to handle doing 10 or 15 minutes work so that we can give you a proper report like this, because this is a comprehensive report that will be quite accurate for your personalized situation. All right, so if you'd like to find out what you can do, how you can take control of your situation, and to find out what you're capable of achieving, then we'd love to work with you, and would love to show you what you can do to make a massive difference, to grow your wealth and to grow your equity, and to help you to sleep better at night, so that you're feeling a whole lot more in control of your situation. So I hope you do that, and look forward to working with you. Thanks a lot.